Hey traders, Raghee here, and in this video we're going to actually circle back to a market that we discussed last week, and that's gold. This is the daily time frame of gold with the grab indicator set on it, which is primed for pullback buying. And if you all recall, we talked about a couple different zones on gold, and the 1803.5 level is what we've tagged here since putting that trade idea out on Friday. So we hit it Friday, we hit it again today, Monday. So one of the things that I want to put out there is just sort of using the volume derived levels. So we're going to talk a little bit about volume profile and some of these levels that I'm using to not only get long, but also to get out, or at least scale out. So first of all, pulling back down, bearish momentum towards this 1803 level, which is the point of control for July in gold. And what is a point of control? It's the single level at which we've seen the most volume in this August contract of gold. So volume brings attention, importance, I think a certain amount of conviction in terms of traders having dug their heels in there and they've built a long position. On the way back up, I'm going to use volume once again. That's the value area high. Now, there's a lot of other nuance we can talk about when it comes to volume, but these are three very easy, very simple, automated ways to look at volume studies and get these submarket sonar support and resistance levels. What do I call them, submarket sonar? We're talking about those levels that are just below the surface, not simply price-based reasons to be bullish or bearish, but volume prioritize price reasons. So if I can get up to about 1824, that'll be my first target for that long position. So we watch some bearish momentum pull us back into 1803. By the way, that's one of a few levels. I mean, this is the entirety of the trade idea that I sent out to members. You can see it here on the left side with the notes that I'm sharing with you all. These are notes that I give our members when we're setting up a trade. So the idea here, this is this right here, the idea here is I'm going to get long, not at a singular level, but scale in across potentially three different levels. And then scale out, take some profit as we hit this level right here. But again, they're all coming from volume levels. The high to low accounts for 70% of total volume traded, while the point of control is the single level at which we've seen the most number of trades occur. All right, so there's a lot of importance to, again, not just the price level, but volume prioritized. Hope that helps. That's the setup on gold, and I'll see you in the next update.